So this is our company analysis on Nissan. To start off with the company's current strategy, they're in a turnaround with a more focus on retrenchment strategy at this current moment. After Carlos Ghosn stepped down and they lost their first movers advantage inside of the EV industry, Nissan experienced quite a lot of economic recession and have at this point needed to go into a recovery phase where they were planning on dropping operation costs by about 70%, reducing their company manufacturing plants to at least 10, and overall focusing in on how they can better improve the current company. And then in the future, they want to go into a plan called the ARC, as well as Ambition 2030, where they will focus more on the EV side of the market and have heavy investments into that part. And then we'll go off to the strengths.
Okay, so some of the strengths of Nissan include just being around since 1933. In that time, for a car company, they've been able to create a very strong brand worldwide and a very known lineup of cars. For the first EV strength, Nissan is a leader in the EV field with the Nissan Leaf. This made it so they were able to do a lot of research and also get in early to an industry that is growing so much in this time. Nissan's supply chain is also spread very globally, which makes them able to get the parts they need when they need them. And also, they have multiple partnerships, such as Mitsubishi, where they own 20% of the company. This makes it so they can keep their R&D low and continue to have that supply chain working efficiently. Another huge benefit of Nissan is their very cost-efficient lineup and also having the luxury brand Infiniti to make up for that missed space in the market share. Nissan has lots of resources in the value chain and resource analysis that were able to keep these vehicles at a low cost and a very efficient cost year to year. Another strength of Nissan is its overall marketing and sponsorships that it does, such as the recent Star Wars sponsorship a few years ago. They're able to keep their brand known and keep customers coming to them. Overall, Nissan's a very strong leader in this industry, and their well-known brand adds a lot of value. Next, we'll go on to the weaknesses.
Absolutely. So with a couple of these weaknesses, I think the largest one at the current moment is just how vast the company is and how spread thin they are. I think the biggest weakness is its inability to fully leverage all of the resources efficiently while keeping up with a lot of the efficiency that the or innovation that the world is trying to produce at this current moment. They also have a heavy dependence on suppliers right now. Companies like Tesla are able to manufacture their own semiconductors and batteries, while Nissan needs to import a lot of its resources, causing a lot of financial loss and a lot of transportation costs and time to produce a lot of these new cars that the world is kind of seeking out. Another weakness that they currently sustain based off of the VRIN test, they have a lot of resources that don't give them a competitive advantage to step outside of the traditional kind of advantage that a lot of other companies have, as well as the fact that they fell behind in the EV industry. After they came out with the Nissan Leaf, they were able to initially get that first mover advantage and sell quite a lot of those Leafs. But as time went on, they lost a lot of that competitive advantage due to their slow product development cycle. So with those weaknesses, it could lead into a couple more opportunities that Jesse will get into.
Hey, I'm Jesse, and when we start looking at Nissan's opportunities, most of these are coming from big shifts in the automotive industry itself, like the need for EV market and the better efficiency. First, the biggest opportunity is the growth in the electric vehicle market. Governments are pushing for EV adoption through regulations and incentives, and consumers are demanding more environmentally friendly options. This connects directly to our pestle analysis, where we saw strong environmental and technological pressure towards EVs. Nissan actually has an advantage here, as we already mentioned, because they were an early player on the field with the Leaf. Even though companies like Tesla and BYD company have moved ahead of them, Nissan already has experience in this space, and if they invest more aggressively, they can still compete and grow in the EV market. Another important opportunity is cost reduction. Nissan is currently restructuring its operations, as we already said, and using automation and AI to lower production costs. This comes from their Re-Nissan strategy that we mentioned, where they are simplifying operations and reducing their global footprint. Since our internal analysis showed that their margins are relatively low, improving efficiency is a key opportunity to increase their profitability. There's also an opportunity in shifting production to the United States. In our political and legal analysis, we found that tariffs are becoming a major issue. By expanding manufacturing in places like Tennessee, Nissan can reduce these costs and strengthen its position in one of the largest markets. In addition, Nissan can take advantage of strong demand for SUVs and crossovers. In our economic analysis, we saw that models like the Rogue and the Pathfinder are already driving sales in the US, so focusing on those vehicles will help generate some short-term revenue. And finally, Nissan has opportunities in innovation and partnerships. From our value chain and VRIN analysis, we saw that Nissan has strong engineering capabilities and alliances, but they need to leverage them better, and investments in things like autonomous driving and EV technology can help them stay competitive in this fast-changing industry. Overall, Nissan's opportunities are centered around adapting to the industry trends, improving their efficiency, and better leveraging the resources they already have. And now we'll go to Mona with our threats.
Hi guys, I'm Mona. So the threats that Nissan is facing currently from our SWOT analysis, we came to conclusion that there are several major threats the company is facing, starting off with the intense industry competition. There's too many rivals such as Toyota, GM, Ford, Tesla, and BYD. Customers are easily switching competitors. The similarity in products is forcing the price wars, and intense competition is shrinking the profit margins and market share. Another major threat is the trade policy and tariffs, especially in the United States. High tariffs tariffs up to 25% on Japanese-made vehicles have caused significantly increased Nissan's cost. The new taxes on imported cars forced Nissan to move factory locations, costing a lot of money and making it hard to plan for their future. Another threat that they're facing is the financial pressure due to weak sales in the United States and China. Use rising input cost and intense EV price competition, they are losing their ability to invest, that they cannot afford to invest into new technologies, which makes it harder for them to compete as the car industry is moving rapidly towards electric vehicles. Another strong threat that they are facing is from Chinese EV manufacturers, especially in China, because they are selling advanced electric vehicles for much lower price and bringing them to the market faster. This intense competition makes it harder for Nissan to maintain its market share. Also, the strict environmental rules are forcing Nissan to spend more and move faster on electric cars. Jobs are being cut and restructure are damaging the employees' morale and productivity. Essentially, the high pressure to pivot to EVs is making it difficult for company to manage staff efficiently. Overall, these threats create significant pressure on Nissan's ability to recover and compete effectively in an increasingly aggressive global market. Next, we will move on to the concerns. The first concerns is the supply chain disruptions, which are the major concerns that Nissan depends heavily on global suppliers for key components like semiconductors and batteries, which is leaving it vulnerably to shortage delays and geopolitical risks.
And for our second concern, relies heavily on the EV market. Competitors like Tesla and BYD company have moved far ahead of Nissan, especially in their battery technology, their pricing, and their innovation speed. New entrants and fast-moving Chinese EV companies are increasing the pressure and making it harder for Nissan to regain the market share in the EV market. And now we will go over to our recommendations with Brock.
Okay, so after all the research we've done and the things we've explained, a couple of recommendations that we came across include the following. For the EV market, we found that if they can continue to cut costs and really dwindle their costs down, they could invest a little larger in the EV market. This can be done with either, potentially maybe doing a full EV system like Tesla or partnering with a tech company with the money that they saved. The next recommendation we have is possibly monetizing data, especially in their upcoming EV fleet. This would create a kind of passive income through car subscriptions like Wi-Fi and other add-ons that would be able to increase profit and invest in the future. And the last recommendation is just to continue to market well and use these brand partnerships to continue to bring customers to them, especially in the ever-changing automotive industry we're in today.